what the play is coming into the summer. So the oil markets are finicky regardless. In terms of coming into the summer market and that having a real effect, that's more of a tertiary metric to look at when we're thinking about the oil market. I think first, it's important to note that the big investment banks have so much money tied up into oil and gas, and it's leveraged money. So you're talking trillions of dollars. So, despite the fact that the oil and gas sector in the broader markets is not as large as it once was, even say 10 years ago, it's still the value of it and the amount of capital that the big banks have invested in it is extraordinary. So they're going to do, and by there I mean the six big banks: your J.P. Morgan, Bank of America, Wells Fargo, Morgan Stanley, Goldman Sachs, Citibank. They are going to do whatever they can do to make sure that that price stays where it needs to stay or higher. So what they can do, besides just raise the price, because inflation is happening regardless. We, again, go to the grocery store, you'll see it. But there are certain people who I agree with state that they're also going to hide that inflation in oil prices and price at the pump and things of that nature. So I think that also has something to do with it, just inflation in general. Now, another aspect that could definitely affect the price of oil is any type of an attack in the Middle East, whether it's genuine or if it's a false flag attack that hits any type of refinery or particular oil field, or shipping disruption, but that would be more or less long lasting. That could have a big effect on the price of oil. And I think that once they get it high, they're not going to let it come back down. And I mean the banks. So there's that aspect. Now, summertime coming up, COVID, although it's alive and well, people stopped caring as much, I guess. You've got states that are lifting the mask mandates. So I predict that a lot of people are going to be on the road, going to vacations, going to visit family. So definitely the summer driving season is going to sustain the demand for gasoline, thus oil and gas. Anyways, all right, so how do we play this? You got your ETFs. You've got Gush. You've got NRGU, which are both based on oil producers, the explorators, the drillers. I generally go with Gush for a few different reasons. Both of them, NRGU and Gush, they're both high yields. They're both leveraged, and they are super risky. You know what I mean? That's the only way I can describe them, as super risky. And you got to understand that those any type of leveraged ETF or any even any stock that's based on a commodity, those stocks and those ETFs don't always run in tandem with the commodity. So just because oil runs up 2%, you could see Gush go down for whatever reason. But the thing of focusing on domestic drillers such as Gush, Gush is your mid-size oil producers. So that gives them a lot more volatility, but at the same time, greater on the upside. So why I like that, or I'd say value added to that, would be if there is a disruption in the Middle East of any sort, or if OPEC comes out and decides to do some crazy, increased, output domestically, our drilling companies are still intact. So that almost insulates us from the rest of the world. So that's like I said, value added in terms of trading domestic drillers. So you've got Gush, you've got NRGU, and then the USO, which the USO is okay. I personally don't really mess with it, but those are different ways to play it. Now, if you want to still stay in the oil and gas industry, but not quite as volatile, you're going to want to go. Well, hold on. My opinion, my thoughts. This is all entertainment purposes. Okay, this is not at all financial advice at all. This is just entertainment, opinion based videos. Anyway, so you want to look at the OIH. Now, what that is, it's an ETF that focuses on the service companies. So, well, I come from the oil and gas industry. I've worked very extensively throughout the industry. So I have a pretty decent idea of what this industry entails. So OIH is the oil and gas service companies. So just to give an explanation, so say BP, they want to drill a well. Well, they'll buy the land and the mineral rights so that they can drill it, but they're going to hire the drilling rig. They're going to buy the casing from a different company. They're going to have a different company run the cement off of the casing. They're going to have another company nipple up their BOP. They're going to rent that BOP. They're going to have all of their wellheads from another company coming in, setting it up. And then when it comes down to the production, once they get all that set up, then they'll hire gaugers that go out and either they'll have it trucked in to a terminal that gets put on a train, or if they have the pipeline infrastructure, they get it to the sales meter and then it goes. But the OIH is what tracks your service company. So we're talking your Halliburtons, your Schlumbergers, your Baker Hughes. And again, it's an ETF. It doesn't yield as much as, say, Gush would, but it's also it's a good one to do depending on what your strategy is. I like them both, but if the drillers aren't drilling, then the service companies obviously don't have business. And that's the boom and bust cycle of working in the oil field, is that, as soon as the drillers stop drilling as much, you're not going to start making any money. And in the oil field, you work a lot of hours, but that overtime, you make a killing. That's one thing I do miss about working in the oil field. My paychecks were awesome. Anyways, but I like what I do now more. At any rate, okay, so those are a couple ETFs to play. Now, I also recommend that if this is going to be a major part of your portfolio, if that's the oil and gas sector that you want to have set up, I would also look for midstream. Now, I personally, my opinion, I think Enbridge is a great way to go. The ticker is ENB. They're out of Canada. Let's just say I know a little bit about the company. I can't really go into too much detail, but yeah, they're a good company. Not to mention they also have a 6.89 dividend, which doesn't hurt whatsoever. They've got a lot of offshore piping. They come from Canada. These guys, they're doing their thing. And I can say that their upper management is good. They know what they're doing. Anyways, so another way to play that is ETRN, and that is more of a lower cost, but also a 7.22 dividend, but just a little bit more on the risky side, in my opinion. I think that that Enbridge is definitely the way to go on that. So if you want, and what I would do is run with some midstream as well. So either or. Now you also want to think about the upstream part of it. So you're going to think about the refineries. LYB, Lindell Bison, they're on point. Again, I know a little bit about that industry. Yeah, I can't go into detail, but yeah, LYB is a good deal. Price point right now, it's a little bit high, and the price points on all of these are a little bit high. But if oil continues to go up, then we're good to go. But they're a good refining company. They actually refine quite a few different products, some poly products that they export. But yeah, they're a solid refiner, and they have a what's a 3.5% dividend. So I mean that's not why I'd buy it. And then another thing I would recommend. Well, another deal I would look at is LNG, which is Cheniere, and they do liquefied natural gas export, and they're out of Corpus Christi. And that's important to note because the pipeline infrastructure either goes to Houston or to Corpus. Now, Corpus, you have the entire Eagle Ford Shale. I mean, it's a huge, huge area of oil and gas. And the pipeline capabilities there all lead to Corpus Christi from the Eagle Ford for the most part. So they've got the infrastructure. They also have, I want to say, 6 different terminals in the Sabine Pass, which is in eastern Texas. Their turnaround wait times are very quick because you have to do preventative maintenance in these refineries. So they're scheduled every so often, say every 6 months, they have to go in and replace this valve or that valve, so on and so forth. Well, their turnaround rates are on point, and their OSHA rating is very, very high. So LNG, Cheniere, I like a lot. Now, at the same time, it's, in my opinion, it's not prudent just to have ETFs. I think that Exxon Mobil is definitely one to put in your portfolio in terms of your oil and gas. Super strong company, great perspectives. I mean, these guys are drilling and they're going to continue to drill, and they've got a crazy dividend. So that's definitely something I would look at. And then if you want to look at something a bit more speculative, Torchlight Energy is also another decent looking play, but again, you're kind of risking. It's more, I wouldn't say it's a penny stock, but it's definitely, a little more on the sketch side. So that's kind of where I stand on that. And I'm trying to pull up some charts, but my computer is not wanting to work. So anyways, yeah, so that's that. That's my take on that. So we're looking at tickers, TRCH. It's Torchlight. You're talking about XOM, that's Exxon, LNG, that's Cheniere, LYB, that's Lyndell, and then OIH, which is one of the ETFs, Gush, GUSH, USO, self-explanatory, NRGU. Again, those are your leveraged ETFs. And then for your midstreams, you're going to look at ENB, which is Enbridge, and then ETRN are the two that I would look at. So in terms of oil and gas, that is a pretty diversified take on it. Again, if I was building out a strictly oil and gas sector in terms of my portfolio, diversification and yield, and then dividend as well, that's pretty much the direction that I would go. Anyways, market, pretty much running flat. Bitcoin, still not showing me a lot of love. It's down almost 2%. But the altcoins are holding the sector up for the most part, kind of, sort of, but slow and steady with the cryptos. But yeah, guys, that's all I have for right now. I hope that this video is informative. Feel free to leave me comments, opinions, and yeah, remember, please, I'm asking very politely, thumbs up and subscribe. Anyways, guys, I hope everybody's making tons of money today, and I will talk to you later.